Most hotels are just hotels. This one isn't, because behind me is one of the most valuable pieces of beachfront property in Florida that was turned into an economic machine. Today I'm breaking down the Naples Beach Club, a Four Seasons resort. The history, the politics, the developer, and most importantly, the deal math. How a project like this can cost over $1 billion, and more importantly, how it can generate a return for its investors. First of all, what is this place? Because it's not just a hotel. This is a 125-acre coastal redevelopment with 1,000 feet of beachfront access. It includes a 220-key Four Seasons hotel resort, as well as 153 Four Seasons branded residences. It also includes retail stores, dinings, and a whole coastal village experience. And finally, as you can see behind me, they are developing a Tom Fazio designed golf course that's supposed to be opening by the end of this year. So first, let's actually talk about the history of this property, because if you know the Naples area, you know that this is not just a development site. This property was actually, prior to this, called the Naples Beach Club Hotel, and it was actually acquired by a family in 1946. And it was family run for more than 3 generations until it was sold for it to be redeveloped into what it is now today. The next question I want to answer is why? Why would you tear down a hotel that was already functioning, extremely popular, and very successful, and demolish it and rebuild it into a Four Seasons hotel? And the answer to that is that it just was not economically optimized. If you have 125 acres and 1,000 feet of beachfront property, the developer saw that there was so much more potential that they could squeeze out and economically maximize this land. So that's exactly what they did, and there's no better brand to do that with than the Four Seasons. Next question that I want to answer is who is behind this amazing project? And the answer to that is a partnership between BDT MSD, the Athens Group, and Four Seasons as the operator of the hotel. Now, when it comes to the residences, they actually have a different operator, and that company is called Discovery Land Company. They're essentially one of the greatest operators of private luxury communities, and they're behind some of the greatest luxury communities such as the Yellowstone Club. So what about the timeline of this project? So the timeline actually starts in 2021 when the land was acquired, all 125 acres, for around $360 million. The property was then later demolished around mid-2022, and then finally they actually opened a portion of the hotel in November of 2025. And as the year continues, they're going to start opening the rest of the hotel, some of the first residences. They expect to finish the golf course by the end of the year. And I believe by the end of 2028, they expect to have all the residences completed. Now, it's important to also talk about some of the challenges that this project faced, because I'm sure they did not get here without any bumps in the road. The first is a hurricane that actually came through towards the end of 2022 when they first started construction. So fortunately, it did not impact the hotel too much. Then the next challenge is lawsuits. They faced a few lawsuits in the beginning just because of how, disruptive a project like this is. It's 125 acres. It's definitely changing the area a lot. So there were a few locals that were unhappy about it, but of course, they pushed through that. And then finally, the rising construction costs. Between 2021 to 2023, construction costs soared exponentially after the COVID pandemic. So that was, I'm sure, a challenge in their development. Now, as I was researching this property, what surprised me most were the numbers behind it, the amount of money that went into it, and most importantly, the amount of money that it's going to be able to return for its investors. So that's actually what I'm going to be breaking down next. Alrighty, so what I have in front of me on my laptop right now is actually a model that I created of the financials of this deal. So just a quick disclaimer before I dive into it. Essentially, all of this data that I'm going to be looking at here, most of it is not public information. These statistics and numbers that I'm going through are just rough estimates that I'm creating based off of my personal research. Alrighty, so diving into the costs of this development, if we look at public articles out there, they're ranging this project as around a $1 billion project as a base case. So here I have an article from Business Observer that I found. My assumption is that includes the cost of the land and the cost of the construction for this project. Now, the one cost that is actually pretty public record that I can cite 100% is the cost of the land acquisition. So the entire 100-acre property was purchased around 2021. And as we see here, it's reported that the land was purchased for around $362 million, and that this was the largest commercial land transaction in Southwest Florida history. So here I have a model that I broke down, basically going through all of the costs of this project. So we have the cost of the land, which was around $362 million. And then here I have an estimate of the hard construction for this project. So that's going to include the land work for the project. That's going to include the hotel, the residences, the golf course, and all the other amenities that are part of the project. Next, what I have listed is actually the soft costs of the project. So that's going to include all sorts of other things that are involved in the project, such as finding a developer, a designer, marketing the project, getting insurance for the project, and costs of that nature. So for the soft costs, I estimated that around $140 million. And then finally, you have the financing carry, which is essentially what they're paying as interest on the loan as they're developing the project. And I listed that around $73 million for this project. So that puts my total model for the cost of this project sort of broken down around with what I found on public websites at around $1.05 billion. So when looking at how they went about financing this project, and when you sort of look at it at different layers, I have a picture here of a layer cake because I feel like that's a good way to think about it. So at the very top of the layer, what we have is sort of the senior and long-term debt, which is around 55%. So here that would be around, let's say, a $580 million loan. That'd be a long-term loan, and that's usually coming from like a bank. The reason that's at the very top of the cake is, let's say the project were to fail and they were to lose money, those were the people who would get paid first, right? It's the banks that are lending the money at the very top level, which is the senior debt. Then below that is what they call mezzanine financing, or sort of preferred equity, which I estimate on this project would be around 10%. I might be wrong, I might be kind of close, but that's around $105 million. And that's sort of the second layer of the cake, where they would get paid up second in line after the senior debt in the event of this project not going well, or maybe them losing money on this project and not regaining the full investment back. And then finally, the bottom 35% of the cake is the common equity, or basically the equity that the investors put in of their own money, their cash investment. And that's who's going to get paid at the very end. Let's say if the project loses money, that's who's going to get cut out from those losses, is the common equity, the sponsor. But on the other end of that, we have to think about is that common equity sponsor, they're going to be the ones who are getting the largest gains on a project like this. So the one note that I want to add, and I actually learned this while I was working on this project, is someone might ask, okay, well, what's the difference between getting debt from a bank in the form of senior debt and then in the middle, the mezzanine equity? And really the biggest difference is it's different layers of getting a loan. So the top layer, it's going to be at a lower interest rate, and it's going to be safer for the bank. But the bank doesn't want to overexpose themselves and lend out 75% of the money for the project. And this is primarily after laws that were in place after the 2008 financial crisis, which was due to over leverage in real estate. So what they have now here is either you could have, as the equity holder, as the investor, you could fill that gap. So what you could have had here is 45% as coming from the developer, or what you can do is you can do 10% in the form of mezzanine financing, which is essentially what's in the middle, and that usually is going to have a higher interest rate, and it's just a different type of loan, if that makes sense. So the next thing I want to dive into is the Four Seasons branding on this project, because obviously, being able to call your hotel a Four Seasons resort is a big deal. And one of the biggest things that people don't understand is that Four Seasons doesn't actually own the properties. They're not the hotel owner. They don't build and develop these hotels. What Four Seasons is they're a management company. So what they do is they come in and they manage the hotel for you, and they put their logo on your property, and in exchange for that, you have to give them a percentage of your revenue. So here, as the management company, Four Seasons charges roughly around 3%, but they also have a performance fee. So let's say if they meet a certain target, they get extra percentage. So really it could be around 4%. And then when we look at the residence size, because also the residences are not just regular residences, they're Four Seasons branded residences. And that is a big deal for the developer, because oftentimes if you brand your residences, you can charge a 20 to 40% premium compared to just non-branded luxury listings in the area. So it's a massive deal for developers because they get to charge so much more money for it, but obviously it comes at a cost. So in exchange for slapping that Four Seasons logo on your residences, they have to pay 2% of gross sales to Four Seasons, the company, for licensing that logo. So just as an example, if you have a $1 billion residential sellout, you're gonna have to just write a $20 million check to Four Seasons saying, hey, this is what I'll pay you for putting your logo on our residences. All right, so now that we looked at the cost of the project, how they probably financed the project, and then also how they got Four Seasons as a brand name for this project, let's look at the outcomes of this project. So there's two different outcomes that we're gonna focus on. One's the hotel outcome, the second is the residences outcome. And first what we're gonna do is we're gonna look at the residences outcome, because that is really where the magic is in this deal. And the reason the residences aspect on a deal like this is so important is because that is the way in which they are able to return their money the fastest, right? Because once you build a hotel, it's probably gonna take a decade or two to get that money back. But if you're able to sell residences, you can get that money back within just a few years after it being built, maybe even sell them out before it's even done being built. And that's massive when it comes to their internal rate of return and the return on the project. So if we look at my model for the outcome of the residences for this project, we have a few key numbers here. which is the number of units. We have 153 units on this project. The reported base price, based on my research, is going to be around $6.5 million. And the reported maximum price for a penthouse suite, 15,000 square feet overlooking the Gulf, that's going to be around $45, maybe even $50 million. And then for this project, the reported price per square foot is anywhere between $2,300 and $3,300 based on my research. And the square foot range on these units is anywhere from 2,500 square feet for a smaller unit, all the way up to 15,000 square feet for a larger unit. So here's really where the magic is. So based on my estimates and my calculations, and also some research I did based on, websites and ChatGPT and various AI tools, if we have an average of a unit being on average 3,600 square feet, and the average price per square foot is around $2,950, and you have 153 units in this entire project. So if you multiply all of that out, you get a base case of around $1.62 billion in gross sales. And then obviously net of that, it's probably gonna be $1.55 billion, maybe even a little bit less than that, because here I calculated 4% for sales and real estate agents, but I did not actually calculate in this the added 2 to 3% that goes to Four Seasons for licensing the logo, which they take from the sales. So it actually would be a little bit less than that. So when you see this number, you're probably thinking, wow, they're already profiting $500 million just on the residences, and then they're left with the hotel, because as we saw, the costs estimated are around $1 billion on this project. And it seems like they're going to recoup that just on the residences, with the hotel being left over. And the answer to that is yes. I mean, that's sort of the magic of a deal like this and why it's so fascinating. And that's really why they're able to boost their internal rate of return as well, because they're able to get that money back so much faster from selling those residences. Based on my research, it seems like they sold many, many residences before them even being built. Alrighty, so now let's look at the hotel side of this property. And what I have here is a few key numbers that's going to help us get a good valuation of this hotel once it's actually up and running and operating. So this hotel has 220 rooms, and once it's up and running, we're assuming here in this calculation a 67% occupancy rate, because obviously not all the rooms are going to be full at all times. Then you have the ADR, which is the average daily rate, which for Four Seasons Hotel is going to be around $1,250 per night. And that assumption is above the Naples average for sure in the luxury segment, but it's definitely comparable to another luxury Naples hotel such as the Ritz-Carlton on the beach and such. So if we multiply all that out, you're going to have an average room revenue over a year of $67.3 million. And then if you look at the industry average of other revenue that comes from that, which is around 32% of total revenue just for food and beverage. So that's going to be from hotel guests spending money on, dining and breakfast and dinners and, alcohol at the pool and sort of things like that. And then there's other revenues, such as maybe things they might spend on experiences or rentals or things at a gift shop or at a retail store, things like that. So that gives the total operating revenue of $113 million a year. And then if you take 37% of that as the gross operating profit, you're left with $42 million a year. And then if you subtract all, other expenses such as management fees and charges and, just reserve money for any incidents that may happen, you're left with an estimated and modeled net operating income of $23.8 million per year, which is pretty amazing. And when you model that out in terms of exit value, if they were to sell this hotel property, at a 6% cap rate, if they were to exit the hotel and sell it, that would imply around a $400 million value of the hotel property. All right, so finally, given our costs and then basically the money that's going to come in from the hotel and the residences, assuming they sell the hotel or they're just left with that asset. Based on these calculations here, which were modeled by ChatGPT, so again, these are just models, couldn't be precisely accurate, none of this is fully public, but on average, if we look at the base model, what you're looking at is a modeled internal rate of return on their initial equity investment of $350 million, if that's our estimate, of around 24.6%. Now again, this is just a model, it's just an estimate. It may be a little lower, around 16%, maybe even lower than that, but also could be a lot higher, anywhere around maybe even 29, 30%, maybe even above that, which would be pretty incredible. So now, of course, not all private investments have incredible performance like this one, but it really shows the power of a private investment and a private deal like this one. If you look at the returns on average from the S&P 500 or the stock market, it's around 8 to 12%. So as you can see, you're beating that here for sure by a margin if the model is correct. And the biggest thing I want to note when it comes to the internal rate of return, I want to reiterate this, the magic on this deal is the residences component, because the faster they can sell those residences out, it shortens their timeline and it increases their internal rate of return. Same thing with the prices of the residences. You know, if they're able to sell them at a higher price, it boosts their internal rate of return so much. And it really shows the power, I think this deal highlights it so much, the power of pairing the luxury residences with the hotel in one, and what that means for a developer. Now, obviously, this project did not come without any risks. You know, as I talked about earlier, they faced a few lawsuits, they faced a hurricane, and also, you know, it's very expensive to develop a property and to insure a property along the beach and along the ocean. So that's, you know, one of the risks. And then arguably probably one of the greatest risks in this project is the cyclical nature of luxury condos and these luxury residences. Fortunately, it seems like they entered during a pretty good time in a good market. However, because of how much this project relied on those residences, if they would have entered during a bad economy, it could have actually been a project that lost money. So that is a breakdown of the Naples Beach Club Four Seasons Resort. I hope you enjoyed this video. I personally really loved researching this property, and it's even more inspiring to just walk around it and see the grand scale of this massive project. And it's even more inspiring to understand how it all just came from an idea in someone's head and how they developed it into what it is today. So I hope you enjoyed this video. If you found it interesting, please be sure to share it with a friend. And if you have any feedback, please leave it down below in the comments. I'm always trying to improve. And with that, I will see you guys in the next breakdown.